Hey everyone, welcome in to another daily editorial here on the KE Report. I'm chatting with Dave Erfle. We're going to be covering the continued breakout in silver, which is also helping, man, oh man, a wide range of the underlying precious metals stocks, both big and small. We are seeing a very strong environment for precious metals, a continued strong environment, and the stocks, from what I've noticed, are really joining into the party. You know what? I'll even get Dave to outline a couple silver stocks for us that he likes, some that we've probably touched on before, but I know all of you like to hear the odd stock or two that Dave is in. Dave is the founder and editor of the Junior Miner Junky. I'll post a link to his website in the show notes. Dave, again, silver right now as we're talking, right at $35 an ounce. It's up almost another dollar today. Has finally broken out from that about $32 to $33 range and has really stepped on the gas pedal higher. This is going on while gold is still holding up at generally high levels, a little under 2,800. And as I mentioned, the stocks are doing really well. So, Dave, let's talk about silver, the significance of this breakout and the momentum trade that we have for precious metals.
Yeah, very significant, Corey. That 3250 line in the sand where silver could not gain any traction above has finally given way. And as soon as it did, it shot to 35 really quickly. And the tell was a couple of weeks ago. I mentioned to my subscribers that when the gold price corrected $80, the miners, they broke down from a 4-week bull flag and they tested their 50-day moving average really quickly, and then they reversed right back up. And that was at the same time a couple of weeks ago we had the GDX and GDXJ did not make 52-week high closes, but the SIL and the SILJ, the silver ETFs, did make 52-week high closes. And that was despite the silver price still lagging the gold price. So that was kind of a tell that the silver price was about to break out. And sure enough, that's what we're seeing here. It ran to 35 really quickly here now, and $38 is the next target. So I wouldn't be surprised to see a bit of a pullback here, but 38 is the next level. And silver, since basically gold and silver were lagging, I mean, the miners and silver were lagging the gold price in tandem, they broke out together. So that's what it takes. It takes the silver price finally getting in gear to bring the miners along with it. Now, what we need to see is we need to see that gold silver ratio get below 75. I think it's below 80 right now on today's move. And once it gets trending below 75, that's when we're really going to start to see the gold shares move. Once that 40 level on the GDX was taken out, we had that 4-week bull flag right under that level, and the level on the GDXJ was 49. We had those 4-week bull flags under that level. So we had a huge move that was consolidating at multi-year resistance there. Now it's breaking out above there, and now that's moving. Now the GDXJ is moving quickly to its next target of 60, and the GDX is moving quickly to its next target of around 50. So it's going to be interesting to see how this plays out. As we both know, the gold price is technically overbought, but I really don't see any headwinds here. Each time we see some weakness in the gold price, it's bought. We saw it yesterday, and it's really interesting to see this playing out, how these things are breaking out.
Yeah, look, it's a good market. We've been covering just how strong this market has been for a couple months now, and some of the bears or naysayers have said, the stocks aren't keeping pace. But man, what I've noticed is a lot of these stocks are doing well. The large ones and even the mid tiers have been doing well, but I've noticed some of the juniors really picking up steam, even without news. First of all, news is being bought. Good drill results are being bought, even some drill results that I thought were maybe mediocre. Those have also been bought, but some of these stocks with no news have also moved higher. Dave, what have you noticed in terms of the type and quality of companies that have been joining into this rally?
Yeah, and now financings are being bought as well. That's also a key to a bull market in this sector because we've had such a bear market, a frustrating bear market, especially in the juniors for so long now. Each time they get some traction, the street knows that the company needs to finance and they'll start shorting the stock. And then once the finance hits, the stock gets hit some more. But now we're seeing financings in these good projects being bought. So yeah, that's another very bullish factor that's happening.
Yeah, we're also seeing a lot of financings being completed too. So companies are cashed up. What about the stocks that still haven't joined in? Do you see opportunities there? Is that the market telling us, look, when these companies join in, maybe that's a sign of the top?
No, that's what's happening. You know, what always happens in this sector is a trickle down, right? We see the majors go, we see the royalty companies and the majors go first, then the mid-tier miners, and then the strong junior developer explorers go, especially the late stage companies that look like takeover targets, those go. So there's still a lot of optionality plays that haven't moved yet. And so it hasn't trickled down to a lot of these companies. I think one big reason is something we haven't talked about this year because it really hasn't taken place in a lot of these stocks is tax loss selling. Because there's still a lot of these optionality stocks that these juniors that are de-risking these multi-million ounce deposits in safe jurisdictions. Maybe they don't have the access to capital, they don't have a strategic partner, or they don't have enough cash. Maybe they're looking to raise cash. Whatever the reason, each time they start to make a move higher, you see tax loss selling come in if the stock is trading lower than it was at the beginning of the year, and we still have quite a few juniors that are in that boat. But what I am seeing in a lot of these juniors that have been lagging is they've built up strong accumulative bases and they're breaking out of them one by one here. But like I said, there's still several laggards that maybe that there's one key component missing. Maybe it's that strategic partner. Maybe the market smells a raise that's gonna take place because the company isn't fully financed for next year. Whatever it is, investors are still selling the stock for tax loss.
Yeah, hey, look, there are fewer and fewer of these stocks though that are not doing well, that are not joining in. I know somebody always probably wants more leverage to the underlying price, but a lot of stocks are moving higher. Dave, these optionality plays, look, of course, we run numbers at current metals prices. These projects are going to make money, but that doesn't mean that they get built. Very few projects get built, and slightly more than those ones that get built actually get taken over. So I know you're always looking for a takeover, but these optionality plays that have been around for so long, yes, they make money at these higher prices, but they've been around for a while and every project's making money at these higher prices. So are they then takeover targets?
Yeah, I mean, the fact of the matter is these gold companies, and earnings season is going to kick off here tomorrow after the bell when Newmont announces its Q3. These companies are generating so much free cash flow that they have little choice but to make acquisitions and strategic investments here in this environment. They're going to have to start addressing their growth problems. So basically, my strategy is sure, you have to make sure that you get into the right development companies that tick all those boxes, right? They've still got the tight share structure, they have the access to capital, they're de risking uh, a, a, a multi-million ounce project that has blue sky potential. It's in a safe jurisdiction. Look at the permitting. Have they started the permitting? Is it going to be 3, 4, 5 years down the line before they have their final permits? I mean, there's so many things you have to look at, but I still think that's where the opportunity lies in several of these companies that have yet to move.
Okay, so maybe they'll become takeover targets. I'm with you that these large miners, they should be growing almost just for the sake of growth because right now, yes, their earnings are better because metals prices are higher, but let's see some production growth. A lot of production in these majors have been relatively flat. Let's see some growth in terms of rotating that money into these juniors and mid tiers. It has been mostly mid tiers though, Dave. Why would that change? Because there are a lot of mid tiers out there right now. Why would the majors go the whole way down to the juniors and take on that added risk and added time to bring a project up to stages that mid tiers are already at?
Well, you've already started to see it. I mean, it kicked off in mid-August when Anglo took over the rest of Osisko Mining, and then you had major silver producer First Majestic take over Gatos Silver, and then you had Core announced the takeover of Silvercrest. So it's happening. You just need to see more of them. And what I'd like to see more of is strategic investments. So these strategic investments by majors or mid-tiers in these juniors eventually lead to a takeover and show the market that these projects are legitimate.
Yeah, some of those companies that you mentioned, a lot of them, again, those takeovers, those were already producing assets or very much de-risked assets. So, more to the junior question, I guess, is strategic investments, right? We need to see some of these majors investing in these juniors to help shore up the capital for exploring.
Absolutely. And they need to do it as well because they need to address their growth concerns.
So then, Dave, in terms of companies that you're looking at, look, silver companies, they are doing very well. Even the small ones that weren't making money for a long period of time, they are most likely starting to make money right now, and their share prices are starting to move. So, what are some of the companies that you're seeing, obviously, that you hold and have shared with your subscribers, but what are some of your favorite silver plays?
Well, there's two of my favorite silver plays right now that are in my top 10 are in the process of breaking out of huge accumulative bases. One is Dolly Vardon Silver. That's an earlier stage company that is still quite away from having a feasibility study, but the stock has got this huge base that it's breaking out of. And another company is AbraSilver, who just recently took on a strategic partner, which cashed them up through next year. And their project is in Argentina, so it's away from the Mexican permitting risk. And their Diablos project is fantastic. And they've also could take advantage of a specific tax situation in Argentina in their favor. And they're about to announce a feasibility study. And they're breaking out of a huge multi-year base right now as well, after they also consolidated their share structure on the news of the strategic private placement.
What are the catalysts for Dolly then? That company has a lot of drilling underway. We followed along with both companies and Abra. Look, we'll get into that company, but in terms of Dolly, outside of this just much better silver environment, what's some of the news in your eyes that can truly move that company higher?
Yeah, definitely the drill results because they're trying to link up a couple of deposits. That is a catalyst. And also, I think Hecla owns either 10 or 15% of the stock now. So I think investors are seeing that as a possible takeover candidate, even though they're not even, like I said, they're not even close to a feasibility study yet.
As for Abra, man, oh man, the company's had good drill results, but they've also had some good economic studies, and they have an updated economic study. Is that a re-rate potential, even though the company already did re-rate off the back of that PEA?
Yes, I think it's a re-rate potential on the back of a feasibility study that they're going to be announcing before the end of the year and what that tax advantage is going to do to the economic numbers of the project.
So does this carry over to a lot of silver stocks? Because as I said, look, silver stocks are running here. These small producers are moving higher. Pretty much everything on the silver front is running. Could you, as an investor, just really dive into silver stocks, even the ones that haven't moved?
I've been advising my subscribers to do that all year. I mean, I've been saying all year that silver was the play of this year, and I've overweighted my portfolio with quite a few silver stocks and gold juniors with silver leverage because, as you know, there's very few pure play silver projects out there. And there's several companies that are de-risking to the later stages these projects that have a huge silver credit. And if the mines were built today and open, they'd be one of the largest silver producing mines in the world. There's a couple of projects that I'm invested in that fit that mold.
So, Dave, from a big picture standpoint, then, for the metals, to me, this seems very much just like a momentum trade as well. Dips are being bought, higher highs, higher lows. The market has been running here for months, going on to a year as we make the calendar turnover. Are there catalysts we need to focus on, or do we need to understand that, look, momentum is our friend? This is a bull market, so ride a bull market rather than look for reasons as to why it would continue or why it would stop.
I think the catalyst is the generalist investor finally taking notice of this sector. I mean, the past few weeks, toward the end of last week and this week, you're starting to see mainstream news finally cover the gold breakout, and they're talking about silver. And over the past 5 months, you're finally seeing inflows in the ETFs because let's face it, when gold broke out above 2100, it was central banks that drove the gold price to $2,500. And that was really evident when you look at the action of the shares in silver at the same time, because central banks don't buy silver and they don't buy gold stocks. So that's a big reason why they didn't participate. But now you've had for 5 consecutive months now, since the gold price has moved up so much, China hasn't been a buyer. And Chinese buying has been replaced by Western investment buying into ETFs. That's a big positive. We need to get more retail investment into this sector. That's a big catalyst on the horizon.
Well, and we have. Look at some of the ETF flows too. Oh, the Western investor is starting to take part, and you know what? It's about time. As I said, it's kind of a momentum trade then, and that's what a lot of investors are looking for too, that upward trend. Not much more to talk about in terms of the sector other than, hey, this continued bull market is, well, continuing, and the stocks are joining in. Silver is really taking charge right now, this week especially. Dave, again, is the founder and editor of the Junior Miner Junky. Click that link in the show notes. Dave, always a pleasure chatting with you.
You too, Corey. Thanks a lot and have a good weekend.